FOMO is getting to extreme levels, coming into the most bullish time of the year from a seasonality perspective. But are we going to see new highs or new lows in the stock market coming into year end? This is what we're going to discuss in today's video, guys. And we're also going to be discussing the analysis that we provided you with last week here, guys. We are going to see there's going to be some crucial news this week that's going to dictate whether we see new lows or new all-time highs in the stock market, guys. So make sure you watch until the end because it's going to be an action-packed video, guys. And as always, if you do find this video useful, please give us a like and share it with anyone else that may also find it useful. And if you are new to the channel, guys, please consider subscribing. We do bring out the latest stock market analysis outlook every single Monday morning. Now let's start off by discussing this analysis that we provided you with last week here, guys. Now, as you guys are aware, okay, and as we've mentioned last week, is that every single time we've had a huge rally going into the FOMC meeting minutes, it was followed by a big correction, a big crash. This has happened over here in April, where we had a massive rally, the FOMC meeting minutes, and then we had a 19.8% drop. This has also happened where in August, massive rally, FOMC meeting minutes, then an 18.3% drop. This is going to happen again here in November, coming into December. We are going to find out in today's video, guys. Let's just go back here for a second to August. Now in August, guys, as you guys are aware, we've had the CPI data that came in less hotter than expected, which drove this market, this huge rally that we've had here. And then we had the FOMC meeting minutes, which came in more or less as expected. Now, what actually drove the crash in August, in the beginning of September, was not the FOMC meeting minutes, was actually Jerome Powell, the chair of the Federal Reserve in the US, coming in and speaking at a conference about how he's not ready to loosen financial conditions. He's not ready to pause raising interest rates. He's not ready, okay, is not going to stop raising interest rates until inflation goes back down to 2%. Now, and he made it very clear that any rally, any loosen of financial conditions is going to be met by even more aggressive rate hikes. Okay, and that was the catalyst that led to this 18.3% drop. Now, we are back here in November, apologies, where we've had a huge rally. Why? Because of less hotter than expected CPI data. This drove this massive rally here. Now, we've also had the FOMC meeting minutes, which came in more or less as expected. No surprise there, okay, which is normally bullish for the stock market. However, we will have Jerome Powell also speaking on Wednesday. So Jerome Powell will be speaking on Wednesday, guys, okay, at 6:30 UK time. Now, it's very important to watch his speech, and it's more important to see the tone and the message that he wants to come across. If he comes in and reiterated the message that, listen, the stock market got it all wrong, we are not going to pause, we are going to keep raising interest rates and stay there, or not cut interest rates for a long time until inflation goes back down to 3%. And any rally, any loosen of financial conditions in the stock market is going to be met with more aggressive rate hikes. If he says something on those lines, the stock market will crash, going all the way back and retesting those lows. Okay, and in my opinion, I think he will say that. If he comes in and says, listen, everything is as expected, we are going to pause soon and perhaps cut interest rates and our job is done here. Okay. If he comes in and says something on those lines, the stock market will rally to all-time highs. But if he does come in and say that, he will lose all his credibility, because all his time he said, listen, we are going to raise interest rates and keep them there for a long time. If he changes his tone now going into the year end, is going to lose all his credibility. The stock market will rally to all-time highs, and that's it for his credibility. So no one will ever believe anything he has to say again, I don't think that will happen. I think that's very less likely to happen, but again, we'll have to wait and see. So guys, this speech is going to dictate what will happen into the year end. There's something else that normally happens at the beginning of December that is very, very bullish for the stock market. Now I'm going to discuss that in more detail going into next week's video. So again, if you're not subscribed to the channel, make sure you subscribe, because that's also big, that's also bullish for the stock market. So if we are indeed going to see some sort of pullback, some sort of crash this week, we need to also be aware of what will happen next week, guys. So make sure you subscribe to the channel and make sure you stay tuned for next week's video. Now, in terms of the economic news that we're expected to see this week, so obviously on Wednesday, we have the Federal Reserve, as mentioned here, speaking on Wednesday evening. Now, on Thursday, we have more data. Okay, we have the PCE data. Okay, on Thursday at 1:30 UK time, and then on Friday, guys, we have what? We have the non-farm payrolls, okay, which everyone will be watching. If we are going to see stronger than expected non-farm payrolls, just reiterates the message that the US economy is very, very strong and they can keep raising interest rates. Okay, so if Jerome Powell comes in very hawkish, saying that, listen, we'll keep raising interest rates, and then the non-farm payroll comes in saying, listen, the economy is very, very strong, it just supports his argument for keep raising interest rates. So that those two data, in my opinion, those two data points are the most important to watch going into this week, guys. Okay, so make sure you stay tuned for that. Now, in terms of charts, in terms of the analysis on the charts, let's start here with the S&P 500. And guys, the S&P 500 here is at a crucial level. It's finally at our trend line here on the weekly, okay, which has acted as very strong resistance in the past, and as it stands, it looks like it's acting as strong resistance now. Every time the price has came to this trend line here, it was met by what? Lows. Okay, we've seen that here, lower lows. We've seen that here, lower lows, and we may possibly see that here, seeing new lower lows here in the stock market on the S&P 500, depending on most probably Jerome Powell's speech, and also what happens in China, guys. Keep an eye on that, because there's some protests going on in China that may affect production, and as it affects production, it affects what the biggest companies there, mainly Apple. If they affect if they stop production, okay, at the Apple factory in China, okay, that will affect supply and most probably will affect their profits for Q3, which is, if the biggest company in the world gets affected, it's like the domino effect. All the other companies will also get affected in the long term. Okay, so be on watch on that. Now, guys, as it stands, as I mentioned before here, I was aiming for 4,100 as a level where I was looking to short. Now, the price has not made it all the way there yet. Now, what the price did came all the way to the upper expected move for November, okay, bounced from it, and now we are seeing some downside pressure. Now, I'm still hoping the price will get here to 4,100 where I can take a short. However, guys, this is becoming more and more likely that we'll see a pullback here, at least to this daily IC here at around 3,830 or so, guys. So the main thing to watch over here, guys, will be the 8-hour time frame. What I'm looking for here, I'm looking for a pullback, okay, below the 20 and the 50 EMA. Okay, so if we can see price breaking the 20 and the 50 EMA, perhaps that will act as resistance, and then we can go and come back into this 3830 or so at least. Okay, so keep an eye on that, guys. But as it stands, okay, this looks very bullish, making higher highs, higher lows, higher highs. There's nothing to tell us that we are going to see lower prices. We need to see a break of structure. Now we'll look at the 8-hour time frame for that break of structure. We need to see a close below this level here. Okay, then we got the lower high here, and then the lower low, and so on. Okay, now this can happen as early as the beginning of the week. Very less likely. However, towards the middle of the week, towards the end of the week, we may get that pullback that we are looking for, guys. Unless power comes in very dovish, okay, be careful buying at those levels, because you are trying to buy the top here, okay, which normally doesn't end up very well. So be very careful if you want to buy at those levels, okay, especially before the speech from Jerome Powell. Okay, I will outline the reasons to be bullish next week in next week's video, as mentioned before. Next, we got the UK 100, and guys, we nailed 100% with this. Okay, we talked about this level here, this trend line here, and also this 1 hour IC. And what happened? Price came perfectly out of this into this 1 hour IC, and now it's starting to consolidate, and we may perhaps see that pullback that we are looking for. Now this is going to be crucial here on the UK 100, guys. This is the last point of return. If we don't see a pullback here, then we are going to see all-time highs for the price coming into this to grab this liquidity, and perhaps the liquidity all the way up here at 7,870 or so. Okay, so this is going to be crucial to watch here, guys. Now, we've discussed last week how price had a nice reaction out of this this daily IC here. Okay, and I also discussed how I can see us grabbing the liquidity that is resting below here, and where is the best time to do that? Well, right here. Now we are seeing some consolidation here. Okay, what I'm looking for here, guys, it's exactly the same thing. Okay, as you can see here, the 20 and the 50 has been acting on the 8-hour time frame, has been acting as what strong support. I'm looking for something like this, something on the lines of this, where the moving averages, okay, they will just keep flatten out here, and then we can see something where the price breaks the 20 EMA, okay, comes back in, retests that, and then breaks the 50 EMA, acts as resistance, and then off we go. Okay, something on those lines over here. I'll be looking on the UK 100 to go full bearish, to be full bearish on those charts. Okay, as it stands, it's making higher highs, higher lows. There is nothing to tell us that we are going to change direction anytime soon, but just be on the lookout for this, guys. If we do break those moving averages here, okay, that is going to be crucial. As it stands, it's in the 1 hour I see here, where we need to see some reaction if we are going to be bearish on this. However, if we break above this 1 hour I see here and above this trend line here, if we see a daily close above this, there's nothing stopping us going to all-time highs. So make sure you set up your alerts. But as it stands, this is a perfect opportunity to short where the price is now. If it doesn't have a pullback from here, then all-time highs are on the books for this, guys. So watch this. It's going to be crucial level. Next, we get the DAX here, and guys, the DAX has been doing exactly what we needed to do. We've been discussing over the last couple of weeks how we've been looking at this daily IC here, where price may have a reaction, and looks like price has came right into this daily IC and is consolidating. Now, guys, with this, first of all, let me start off with the weekly here, because it's something very, very important to look at. We've had 7 weeks of bullish price action. 7 weeks of bullish price action. Now, the last time we've had 7 weeks of, this is the maximum amount of bullish action we've had ever. Okay, 7 weeks, no more than 7 weeks. Okay, and every time we reached 7 weeks, okay, of bullish price action, it was met by a pullback. Okay, so most probably we're going to see a pullback this week. Now, how deep is that pullback going to be? It depends on the speech from Jerome Powell. If it comes in very hawkish, and as I mentioned before, we can see we can perhaps come in and retest those lows. And this weekly IC here is a perfect opportunity to go long term. Okay, so target this as a long term sell opportunity, okay, in and around 12,300 or so. consolidation here, and then we see new highs. That will be perfect. Okay, remember, this is bullish now. We had the break of structure, so there's nothing to tell us that we're going to new lows as it stands yet. Now, going back to the daily, I've been talking about this liquidity area resting here. There's a lot of liquidity resting here and also resting above here. Now, that can be grabbed, perhaps not yet. Okay, so we may go and retest the lows, and then we may see that liquidity being taken. Okay, but just keep an eye on that, because they may also want to take this out before they test and they retest those lows here. Okay, what do we want to look out for? Exactly the same thing. 2050, strong support, guys. You want this to break. You want to see close below those two EMAs here, and they act as resistance. That will signal a change of trend. As it stands, this looks very bullish, guys. So be very careful. But again, be careful buying at those levels. Okay, I think we are getting into extreme levels here, so it is not worth trying to buy here. We're having a lot of divergences, negative divergences that are building up, not a lot of bullish confirmations here as it stands, guys. Okay, so be very careful. Look for sell opportunities. As it stands, it looks like most indices are at levels where we want to short from. What do you want to do? You want to scale in your short positions. Okay, so start off with small positions, and as you see more and more break of structures, then you want to increase your position sizes. Okay, don't go all in. Okay, this market, I mean, if Jerome Powell comes in very dovish and says that's it, I'm done raising interest rates, we're going to pause now, that's it. We're going to all-time highs, no question about that. Okay, and there's nothing to stop that from happening. Okay, so be very careful. Okay, and also December is one of the most bullish months from a seasonality perspective. Okay, so be very careful on that. Okay, I think we'll have a shock this year. I don't think that's going to happen, but again, there's some other number of reasons that we have to keep an eye on. Okay, next we get US 30, guys, and here we finally had the break of structure. We've been talking about this level here acting just closing below it, not giving us that break of structure, but we've had the break of structure. So we are now what? We are now bullish on US 30. And guys, if you look at this, okay, we are about let me just look where we are today. Actually, we are about 6%, okay, or actually no, 7% or so from all-time highs, guys. So US 30 has had more or less no drawdown this year. Okay, so if you talked about a crash in the stock market, you wouldn't see that on the Dow Jones on US 30. It has performed very well, and it has recovered very well. Now, does it mean that we are going to retest and go to all-time highs by year end? It's a strong possibility. Okay, however, in my opinion, I think we'll retest those lows very soon. Perhaps at some point this week. Now guys, here, okay, we've had a perfect play coming out of this daily IC, a perfect touch here, and now we're going higher. Now what I'm looking for, okay, we had this 4-hour IC here, okay, and we also have this daily IC. If price is to have a reaction, okay, we've just cleared the liquidity above this area here. Is prices to have a reaction, it has to do so at the 4-hour IC or at the daily IC. If we break this, then we're going to all-time highs, no question about that. But if we are not, if we are unable to break those levels, okay guys, then we are going to be retesting those lows at the minimum, guys. So make sure you watch out for that. Again, the 20 and the 50, strong resistance, strong support, strong support for the last couple of weeks or so. We just need to see a break off below that, okay, for us to go full bearish on US 30 as it stands, guys. Okay, is getting to this, we are getting those negative divergences. There's not a lot of upside potential as it stands, unless we get some catalyst that will drive the stock market. As it stands, we need to look for shorting opportunities as much as we can. Next, we get the US 100, guys, and here this is the weakest out of all indices. Okay, why? Because tech companies, they hate interest rates. They hate high interest rates, and as we have the interest rates are very high as it stands. Okay, it affects tech companies the most, and you can see that here. It doesn't affect the financial as much. Okay, the banks, they like high interest rates, and you can see, and as you did see on US 30, okay, we are US 30, it's almost close to going back to all-time highs, whereas on the UK 100 here, we are at the lowest here. Okay, we haven't even had a break of structure here, guys. So as it stands, this is bearish, and we may see new lows in the stock market. Remember, the Fed is still raising interest rates. There's no reason to go full bullish on the stock market, and that's where the FOMO comes in. Okay, so that's, we have to be very careful. Now, as it stands here, guys, we've had the reaction from the daily IC here, and we are just consolidating over here. Now, what I'm looking for here, okay, I'm looking for a break below this level here. So perhaps a daily close below this level, and then we go and retest the lows here. Okay, however, if we manage to close above this level here, guys, then I am targeting this daily IC here at 12,600 or so, where I want to see some consolidation, and perhaps we'll take a short from there. Okay, as it stands, guys, the daily has broken structure to the upside, the weekly has not. So there is some momentum here on the NASDAQ, okay, for more upside. However, that may be limited for the time being. Okay, I think we can have some long-term potential on here going into next year, but not until then, not until the Fed has stopped raising interest rates. Okay, so be very careful on it. Again, we are looking for a break of the 20 and the 50, which may happen very soon, actually, as it stands here. Now, we did open, guys, on the indices with a gap, so it wouldn't be surprising for us to close that gap and be bullish coming into the first couple of days of the week, and then we get that big crash, okay, coming into Wednesday and Thursday. Okay, so watch out for that. Next, guys, I want to show you the VIX, and the VIX has been at its lowest, okay, point so far this year, one of the lowest points so far this year, and we've opened with a huge gap on the VIX. Now, I wouldn't be surprised to see the VIX, the gap being filled here, coming into the beginning of the week. However, guys, if we go and we have a close above 25 here on the VIX, then I believe we're going and retesting those 30-35 levels, which will put a lot of pressure on the stock market, on indices. So watch out for this. Okay, looks like we are getting some more fear coming back in the stock market, okay, which is negative for indices. So be very careful on that. However, guys, I just want to say we 100% did what? Smash our analysis. So back in at the beginning of October, I was talking about, and if you don't believe us, go back and watch the video from the beginning of October, talking about how VIX has most probably topped here short term, and we're going to have a crash in the VIX and a rally in the stock market. We are 100% nailed that. Okay, so if you followed us since the beginning of October, you should have booked in some massive profits, and I hope you did, guys, and don't worry, we'll carry on with this going forward. Okay, but as it stands, the VIX is very low. Okay, it needs a pullback up, okay, which may put some pressure on the stock market. We do have two gaps here. They may want to fill those in before going higher, but they not necessarily have to do so. Okay, so be careful on that. Next, the DXY. The DXY finally is seeing so much downward pressure here, guys. That's crazy how the DXY has changed its course from a couple of weeks ago. Now, what I'm looking for here, guys, we are still in this daily IC here, and we are retesting this IC here, but we are still here. We haven't seen a break below. What I'm looking for, if we do break below this daily IC, then I'm looking at this trend line here. Okay, I'm looking for, there's two things that I'm looking at actually. So as you can see now, the price is stuck between the 20 and the 50 EMA, okay, which has been some strong support in the past. Now you can see here we broke below the 20 weekly EMA and we retested that back, and now it's resistance. Okay, so we failed to go above it. Now that's big there. If we break below the 20, the 50 EMA also, okay, and we fail to go above it, okay, then that's it. There's more pressure on the DXY here, guys, and we will most probably go back and retest this trend line here in the long term. So be an eye on that, be on close eye on that, guys. It's going to be crucial. Okay, if the DXY is not able to hold above those levels here, then we may see a rally in the stock market, okay, which we'll discuss that next week, okay, in the next week's video. But as it stands now, watch those levels, very, very important. And if we do close below, okay, then most probably the stock market will go higher. I don't think this will happen, guys. Again, that's very unlikely to happen. I think that if Jerome Powell, if he wants to keep his credibility, he needs to push the dollar higher. Okay, he needs to push the stock market lower. He needs to do that. If he fails to do that, or if the stock market fails to take him seriously, then yeah, okay, we're going lower, and that's it. There's nothing saving this. We're going lower on the DXY and higher on the stock market. Next, guys, we get gold here, and as you can see, as the dollar gets weaker, gold gets stronger. And what I'm looking for here, guys, okay, as I've mentioned before, I'm looking for this liquidity to be grabbed here before going and grabbing the liquidity here at the lows. This area here is way too clean here not to be taken out. So I'm looking for this to be taken out, perhaps either going into year end or into next year at some point. However, if we see a weekly close above this level here, then I think we can retest those highs here. And what I'm looking for actually here, I'm looking for price to come into this 4-hour IC. So if we do see a close above this level here, guys, so kind of a weekly close above this level here, then I think we have more room to go here, and perhaps coming in and taking those liquidity here and come back into this IC here. So watch this very closely, guys. We are maybe seeing some either long-term long opportunities or long-term short opportunities, depending on how this play out in the next couple of weeks or so. Next, we get GPDUSD. Now, we've been talking about this daily IC here, how we wanted to see some reaction from it. Now, we did see an initial reaction from it, but now price is back into it because of a weaker USD and some stabilization in the UK market, okay, in the UK economy and UK politics. Now, guys, if we get a close above this IC here, this daily IC, and I can see us going to grab the liquidity that is resting above and coming into this 4-hour IC here, and there's also a daily IC here. So if we go above it, I think there's more room to go for us to go clear this liquidity and into this IC here at around 1.25500 or so. So keep an eye on it. Again, if we see a candlestick closing below this level here, this area here, I can see us retesting the lows here, coming into this daily IC here. As you can see, guys, this is in a bullish market structure here, so there's no reason, unless we see a BOS here, there's no reason to be full bearish on GBPUSD as it stands. And lastly, guys, we need to talk about Bitcoin. Now, yes, there's no liquidity, there's no volume, there's no money being pumped into cryptocurrencies at all. Everyone seems to have lost faith, okay, which may give us some further downward pressure going into our target 12,500. But if it doesn't, okay, and if we manage to get some more liquidity coming into the end, then we perhaps break above this area and we go and at least coming into this daily IC. As it stands, guys, there's nothing happening here. There's literally no volume whatsoever, and it seems like all the retail investors have literally disappeared. As we get as we get above 25 or so on Bitcoin, I think more retail traders will come in here. And at that point they can crush it even further. As it stands, there's nothing happening. Just have your alert set and just let's see what happens. But again, our ultimate target is 12,500 from a long-term opportunity, guys. That's pretty much it from me this week, guys. Thank you very much for watching. And if you are new to trading the stock market, guys, please visit our website mcitradingacademy.co.uk, where you can find out more about the strategies that we use, about the courses we offer, and you can also join our free Discord community. Thank you very much, guys, and I hope you have a great trading week.